One of the biggest, most underappreciated investment risks heading into 2023 is China-related investment risk. Something really important happened in October of 2022. Xi Jinping took over his third term as leader of the Chinese Communist Party and the leader of China. That's a really big deal because it broke the chain of succession, the historical unspoken 2-year term limit of 2 5-year terms as leader of the Chinese Communist Party. Xi Jinping broke that. His power is now unconstrained, and he's been pretty clear that he intends to use it, potentially by annexing Taiwan, potentially by being even more geopolitically assertive abroad, which creates the risks of conflict not only in the South China Sea, but potentially around the world. This is something that American investors have not yet woken up to, at least not fully. In part because the largest asset managers in the world that will repeatedly warn and educate investors about so-called climate risk will not say the same thing about China-related risk. Why is that? It's actually pretty simple. If they did warn investors about it in the US, they might risk their own revenues in China. That's something they're not willing to do. Well, guess what? That's why we at Strive committed since day one that we would not build an asset management business in China, because we cannot be good fiduciaries to our American clients, good, vocal, engaged shareholders, if we also have the boot of the CCP on our neck. To the contrary, that's why I want to make sure that we're able to speak freely about what I see as the top underappreciated investment risk that is China-related risk, but also embedded in that for investors who are prepared is opportunity. Opportunity to take advantage of market dislocations created by the risk that China invades Taiwan in ways that prepare investors and their portfolios for the shock waves to that system.